welcome back to the show. We are continuing to track the latest developments surrounding the Iraqi dinar and the broader economic reforms taking place in Iraq. Today, we're looking at a complex picture, one that involves significant structural changes, ongoing fiscal challenges, and recent high-level diplomatic engagement. There is a lot of information to cover, so let's get started. We are now in July, and as of today, the official exchange rate from the Central Bank of Iraq remains fixed at 1,300 dinars to the US dollar. This is a crucial anchor point. We see this reflected in the most recent data, with the rate showing very little movement. Real-time data from financial platforms shows the USD IQD pair trading at approximately 1,310.45, which is within the established parameters for the official rate and the rate at which banks sell to traders, which is 1,320. There is, however, a persistent and important gap between this official rate and the rate seen in the parallel market. Recent reports have shown a dollar shortage in local markets like Erbil, driving the street rate significantly higher, with some reports indicating rates as high as 1,560 dinars per dollar. This divergence is a key point of tension in the Iraqi economy. Iraq's central bank governor, Al-Alaq, has been very clear on the country's monetary policy direction. In recent statements, he has firmly stated that there is no intention to devalue the Iraqi dinar. He has also denied the existence of any U.S. ban on Iraqi funds, noting that both the U.S. Treasury and the Federal Reserve have praised the central bank's role, and that the bank continues to provide U.S. dollars to travelers and traders at the official rate. This is a significant signal of cooperation and stability, but it contrasts with the reality on the ground where traders are facing dollar scarcity and market speculation. This speculation appears to be fueled by a mix of genuine concerns and rumors. Some market chatter suggested the central bank might raise the official rate, a rumor that was firmly denied by a senior economic advisor to the Prime Minister, who characterized reports of an impending hike as baseless. The advisor attributed the current fiscal squeeze and market volatility primarily to a geopolitical event, the ongoing closure of the Strait of Hormuz, through which a vast majority of Iraq's oil exports once flowed. This demonstrates how the Iraqi dinar is acutely sensitive to both regional stability and the country's oil revenues. Despite these short-term pressures, the long-term focus remains on significant structural reforms. The central bank, under Governor Al-Alaq, is pursuing a comprehensive banking reform agenda that is receiving direct attention from Prime Minister Al-Zaidi. A key part of this is the implementation of a compliance framework developed by the global consulting firm Wyman. This framework is designed to bring Iraqi banks up to international standards. The goal is to allow compliant banks to deal in foreign currencies without restrictions, effectively moving away from a centralized currency auction system towards a more market-based banking infrastructure. This is a foundational change. By digitizing payments and formalizing the banking sector, the aim is to narrow the gap between the official and parallel market rates. The push toward formalization is already showing results. Iraq has mandated that all government institutions must be fully cashless by July 2026, and significant progress has already been made. For example, Rafidane Bank recorded electronic payment settlements for government institutions totaling 2.65 trillion Iraqi dinars in the first quarter of 2025, a 244% increase year-on-year. This video is for informational and educational purposes only. It is not financial advice. This massive shift toward electronic payments is a major step in reducing the cash-based economy, which is often a factor in corruption and opacity. And speaking of corruption, the Iraqi government has launched a nationwide anti-corruption campaign called the Dawn Crackdown. This has led to the arrest of numerous officials and the seizure of significant assets. In one high-profile case, authorities seized approximately $20 million in cash and 5 kilograms of gold from a former deputy minister of oil, with the money discovered hidden in plastic water bottles. The campaign, which has targeted political figures and business figures, is a key part of the government's agenda to restore confidence in state institutions. Financial expert and former CBI Director Mahmoud Dagher has pointed out that cash-based dealings are a key factor in many corruption cases, highlighting the importance of these anti-corruption and digitalization efforts. On the fiscal side, the picture remains challenging. The International Monetary Fund has projected that Iraq's fiscal deficits will remain elevated over the medium term due to rigid current spending and declining oil revenues. Government debt is projected to increase to 77.6% of GDP by 2030 according to IMF projections. This underscores the importance of the reforms and the need for Iraq to boost non-oil revenues. However, the World Bank projects significant GDP growth for Iraq in 2026 to 2027, driven by rising oil export volumes, which could provide some much-needed fiscal relief. The government is also taking steps to modernize its financial sector infrastructure, including signing a memorandum of understanding with the Iraqi media network to enhance cooperation and highlight the banking sector's efforts. This brings us to a major diplomatic event on the horizon. Iraqi Prime Minister Ali Al-Zaidi is scheduled to meet with President Trump at the White House on July 15, 2026. This is the most significant U.S.-Iraq bilateral summit in years. The agenda is expected to cover U.S. energy investment in Iraq, security architecture, and financial sector integration. High-level White House backing for Iraq's economic reform program would be a powerful signal to global investors. It would signal that Iraq is a supported destination for international capital and would further align U.S. and Iraqi monetary objectives. The fact that this meeting is happening and that a formal framework is being established suggests a deepening of the financial cooperation that many analysts see as a prerequisite for any long-term appreciation of the Iraqi dinar. So, to wrap up, what are the key takeaways for today? The official exchange rate is stable at around 1,300 IQD per USD, but a significant spread remains with a parallel market, driven by dollar shortages and geopolitical pressures. The central bank is pushing forward with reforms, including the Oliver Wyman compliance framework and a cashless government mandate, to modernize the banking sector and combat corruption. These efforts are crucial for long-term stability. And finally, all eyes are on the upcoming White House summit, which could catalyze further investment and solidify the path towards economic reform and currency stability. This video is for informational and educational purposes only. It is not financial advice. The Iraqi dinar story is a long-term one, and as we've seen today, it is being written on multiple fronts, from monetary policy and banking reform to fiscal management and international diplomacy. Thanks for joining us for this update. We will continue to track these developments closely, so make sure to stay tuned for the latest. And if you're finding this analysis valuable, please consider subscribing to the channel to stay informed on the latest news and analysis regarding the Iraqi dinar and the Middle East economy.